Hi, in this video, I'm going to share with you some tax changes for business and for superannuation. Start from 1st July 2022. Before I start, I just want to let you know that this is just for the information only. The material that I prepare here is only for informational purpose only. It's not intended to provide any advice. You should consult your own tax, legal, and accounting advisor before you engage any of the transactions that I'm about to share with you. For business, start from 1st July 2022, the Superannuation Guarantee, the SG rate will increase from 10% to 10.5%, and it will continue to increase by 0.5% each year until it reaches 12% on the 1st of July 2025. You need to make sure that your payroll, when you do the calculation for the SGC, make sure that it's increased to 10.5%. For the superannuation guarantee payments, you need to pay on time. The super fund that you need to pay for the employee, the SGC, due on the 28th of October, 28th of January, 28th of April, and 28th of July. So you don't want to miss out all this deadline. If you pay the superannuation guarantee payment late, then it's not going to be tax deduction. But not only that, the ATO, if they find out that you are late in paying the superannuation to the employee, you will get late payments and a heavy fine. So just make sure that don't miss out the deadline. Another thing that changes start from 1st July 2022 is $450 threshold has been removed. What that means is if the employees age over 18, even though their earning is less than $450 per month, as an employer, you still need to pay the SGC, the superannuation guarantee for them. If they are under 18, they need to work more than 30 hours in order for them to receive these superannuation guarantees. This is good news. Governments have lowered the tax installments for small business and investors. If you are a business owner or investor earning investment income, then the ATO will automatically work out your pay-as-you-go tax installments based on your latest tax that you lodge. They want you to pay the tax in advance. What they normally do is that they will estimate your income for the following year. They will normally uplift it by 10%. So if they do that, then that means that you have to pay higher pay-as-you-go tax installment. But because of the changes from the 1st July 2022, the tax office or the government, they're gonna uplift just by 2%. That means your pay-as-you-go tax installment will be lower. You will have more cash flow to use it in your business. It can be good and bad, because at the end of the year, when you need to lodge the tax return, if it's work out that your actual tax is much higher than what you've already been paying to the tax office, the pay-as-you-go tax installment is paid by quarterly, you're gonna maybe up for a big tax bill. But if it's you're already overpaying, let's say your business is making losses and you're already overpaying the pay-as-you-go tax installment, then you're going to get a tax refund. So for your superannuation fund, there's also good news as well. Start from 1st July 2022, there's no more work test for people that under the age of 75. If your age is under 75, you can make a non-concessional contributions to your super fund, or you can do a salary sacrifice superannuation contribution without meeting the work test. So it used to that you need to work at least 40 hours over a 30 days period in the financial year. They removed that work test, which is a good news. If you're under 75, you still can contribute to the superannuation fund. And if you have your own self-managed super fund, there's a lot of benefits of it. If you put the money into the superannuation fund or put it into your self-managed super fund, you can draw that out as a pension, because if you put the money into the self-managed super fund or your retail superannuation fund and your age is over 60, then and you're on the pension phase, then whatever the income earned and capital gains that made is tax-free up to the pension cap. Now, this is another good news, which is about downsizing. If you have a house, this is from 1st July 2022, eligible individual is age 60 now. It used to be 65. So what this means is, like, if you own a house and then you want to downsize that, like you're selling that house, the proceeds that you get from selling the house, you can put that towards your superannuation fund fund. If it's a couple, then you can put maximum of 600,000, 300,000 each to put it into the superannuation fund. The benefits of putting into the superannuation fund, as what I said before, if you are on the pension phase, all the income and capital gains tax that you earn in that fund is going to be tax free. From the tax point of view, is much better than you owning in your own name. After you sell the house and if you investment in your own name, then you're going to pay the tax up to that marginal tax rate, which is a lot higher than the superannuation fund. This is another good news as well. It's about first home buyer. The first home super saver scheme enable the first home buyer to withdraw the voluntary contributions they have made to the superannuation fund, also the associate earning, to put towards the cost of the first home. So what this means is, let's say if you make a voluntary contributions to your superannuation fund as a personal superannuation contribution, you get a tax deductions on that from your personal, and the superannuation fund only pay 15% tax. Then after that, you can withdraw that amount. If you're a first home buyer, you can withdraw that amount up to 50,000 to put towards your deposit for your first home. If you work it up carefully, you can have a bit tax saving there, and it's really good tax planning strategies for people that planning to buy their first home. So this is good news as well. Please feel free to call us. You can log into our website tmsfinancial.com.au and you can book the appointments to talk to us, or you can call us directly 0297256169. We're happy to assist you with any problems or issues that you have. Thank you and have a nice day, and stay safe and take care.